Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, Tuesday. Monday was a real shit show. Let me tell you. Let me tell you what. Yesterday was pretty crazy. My kids have messed with my camera and stuff. Well, my sound. So give me a second here. I'm gonna make sure I got everything set up. There we go. That's a little bit better. Hopefully I'm not too loud. All right, let's come and look at the charts. So, the treasuries yesterday came up a good 10 basis points or something like that. Looking pretty good. And then in the overnight session, extending that by quite a bit, but the treasury's completely flipping around. And when we come to the S&P 500, man, what a downer of a day. It's pretty bad. That's almost 100 points, isn't it? Almost 100 points. Pretty bad down day. Let's come and look at it on a daily chart. You can really see. Okay, so we're getting to like that 10%. We're getting to that 10% drawdown. It's not like super crazy. Okay, remember when we had like the Trump trade war, I think it was worse than this. I think Trump trade war was negative 15 or 20%. But it was pretty bad. Hopefully we get a little bit of a reprieve today. We'll talk about that. Oil kind of middling down there at the bottom. Gold and silver. Okay, gold and silver kind of had a little falling out yesterday, but are recovering the range this morning. Copper having a little bit of a run. Kind of still expect copper to be largely on the positive side because Trump is saying that he's going to put tariffs on it. And then Japanese yen, one of the best performing currencies still, and the dollar still on the downside. And in fact, a little bit further move this morning. And the Bitcoin, dipping briefly below 80K, but not for long. So that is basically where we're at. Let's come back over here. Let's make sure that we have our strategy enabled. Strangely enough, I haven't been getting many signals from it this week because, you know, you have to get a big imbalance. And the imbalance in the treasuries isn't actually that big. There's not actually that crazy a volume coming into the treasuries. Does kind of make me think that maybe all of this noise is a little bit overdone, because I'm not necessarily seeing like really active volume come in long to the treasuries. So I do think that it's probably more like correlation flows and things like that. But we'll see. I did get here early today, so let's just relax a little bit until everybody gets here. I guess we're doing okay. But yesterday my water heater broke. Can you believe that? Good morning, Uzi. Yeah, yesterday it's like leaking on the floor. So yeah, we're gonna have to call. Yeah, well, at first it was like the pilot light won't stay lit or something like that, and then he was leaking. Yeah. Boo. So no shower for me this morning. What trading platform is this? Well, the depth of market trading ladders is Jigsaw Day Trader, and the charts I am using NinjaTrader 8 with my own custom suite of indicators that you can download at speculatorshet.com. What is a hybrid water heater? Will that extend the amount of hot water I get? A spare in my basement. There you go. I suppose that maybe it will give us an opportunity to get a bigger water heater because it's not enough for everybody to take a shower in the morning, but not exactly a purchase that I want to have to make while I'm unemployed. Make sure you watch the video that comes out today after the stream. All right? It's just a general video. Actually, you know what? I'm really interested to see how this next video performs, because it's about which assets you should trade, going into the pros and cons of stocks, futures, options, etc. So it's information that I think pretty much all you guys that are here every day know, but not everybody on YouTube necessarily knows. So it should be like a good general audience video, but I don't know if they'll actually be interested in it. So we'll see if they're interested in it or not. It's a water heater that has a heat pump in the top. Okay. So that, oh man, they are just starting out the session on the upside here, aren't they? And in fact, it looks like a solid 10K in buying. So, you know, watching the reaction on social media to the down day in the S&P 500, I am just not bothered yet. I am just not bothered yet by it. And I think the big reason why is because if I come back over here to a chart of the treasuries, we're only just back to where we were in December. And I have kind of felt that almost this whole, decline here in January was kind of a little silly. So maybe that's why I'm just not so bothered by it. It's like the treasuries are not yet to levels that are like panic, a recession is coming, yada, 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 right? I can't even remember where I bought anymore. I think it was somewhere around here where I put a little bit into TLT. It uses the heat in the room to heater water. So does that just make it more efficient then? I think what I need is something bigger. I remember wanting a bigger water heater and then being like, we can't do that. They didn't want to do any of the changes that we wanted to make. Don't get a plumber to do it. I don't know if I have the time or wherewithal to do something like that, to be honest with you. I don't know, we'll see. Well, especially to see if it can just be fixed, right? So I am going to have somebody come out and look at it. You've had one for 30 years. This water heater is only like 9 years old. Well, let's see here. When did we moved here in 2018, I think. When was the Las Vegas shooting at? Oh, it was 2017. Okay, so it was like late 2017 that I moved into this house. So it's been 8 years basically, right? Not even 8 years and the water heater is going out? Was there something I was supposed to do to the water heater that I didn't do? Probably there's some maintenance that I was unaware of. Zero Hedge says if it bounces, it could bounce a lot. The forced mechanical flows into low liquidity will work both ways. That's probably likely, but I think that we're kind of starting to get into the the two-way high volatility phase of this. So by the way, we're getting a bounce here. Inventory cost basis says at 11 for sellers and 14.5 for buyers. You have hard water. I mean, I have a soft water thing, but the water is relatively hard, and I probably need to change the salt. More expensive water heaters have descalers built in. I should just get the nicest, biggest water heater I can possibly can. Somebody flashed an 11K bid in ZT. You know, there is quite a bit of interesting liquidity aberrations in the treasuries overall today, right? Got a relatively large offer, 3,700 at times. That's unusual. Now 4K on the bid. So there's somebody placing liquidity, you know, one price away in ZN. That's not something that I see every day. The overall liquidity looks okay, but there are some prices, like right there at 06 half, that are kind of lighter than usual. And you come in like 22, 23. So there's kind of some of that same thing going on in ZB. So it looks to me like there are some players here in the treasuries that aren't usually there. And I think we kind of started to see a little bit of this yesterday, but it's like, it seems much more clear today. Who would do that? Why would somebody do that? Well, let's see here. Trying to find where all this information is on the CME. Because I thought that ZT was pro rata, but like it changes. So this one. No. Here it is. CME Globex product reference sheet. Was it on the inside bid? Here. So it uses algorithm K. Which is configurable. Top order percent allocation 100%. First in, first out order allocation 40% and pro rata 60%. Okay, so it is still like that. Okay. So what happens is, if I go and actually, let's go and read what ProRata says, okay? The FX calendar algorithm fills orders according to price, order, lot size, and time. An incoming aggressor order's quantity is multiplied by each resting order's prorated percentage to calculate the allocated trade quantity. All fills are rounded down to the nearest integer. If an allocated trade quantity is less than 2, it is rounded down to 0. An order's pro rata percentage is calculated by taking order quantity divided by total quantity at a certain price. Excess lots, which occur as a result of the rounding down of the original allocated trade quantity, may be allocated first and first out. So what it's saying is, if I go in and I add 11K to the bid, so that I am now like the majority of the inside bid, even though I added my order later and should be at the back of the queue, it's not a first in first out queue, it's a pro rata queue, which means that my order will be filled 60%. So what you will often see in ZT is people place really huge orders on the inside bid so that they get filled. So that basically it's a way of like jumping the queue. And it's really common to see like, okay, some of that gets filled and then they cancel the rest of it. So some of that liquidity is probably not real, but the reason you put that on there is to improve your queue position. This is why watching the order flow in ZT is like very different, because it's using a pro rata queue instead of a first in first out queue. That's also why ZT tends to have like really, really big bids and offers. Because there is essentially an advantage to the market makers to providing a ton of liquidity. Now, if you say that they just flashed it, who knows? But you can't read that in the same way that you would read it over here in ZN. By the way, ZN is right at the inventory cost basis, but as of late, we've been finding that it goes to the other side. So it would be like a real pullback would really be more like 14.5. It's a pretty big spread though. I don't know. Oh, I'm not reading it as anything. Okay. You asked the question. I was just trying to answer the question. Midroll asks, can it be rebalancing funds who are moving money from equity to bonds? Well, I mean, that's the thing is that I'm really not sure that I'm really seeing a lot of allocation out of equities into bonds. It kind of looks to me more like that the equity market is repricing growth. So they're not necessarily like taking all their money out and putting it into bonds because they're afraid there's going to be a recession or something like that. I think one of the things that happened was that there was a GDP Now forecast that had GDP at negative 1.2 or something like that, right? And the reason that that happens is that the GDP formulas take imports out. They say like, here are all of the imports, and they minus that from the overall GDP. And that's because that GDP will be counted in, like when they actually sell the things. And so if they don't subtract the imports, you're like double counting it, right? But the problem with that is that they haven't sold the stuff yet. So you're going to see this negative print until it all kind of like evens out. So if you look at some of the other Fed Now forecasts from the other banks, you get more like a spot 4. So that measure is just kind of being screwed up by the current data a little bit. And that everybody took that and ran with it like, oh, there's going to be a recession. But all of the data and everything that we're getting right now says that recession is unlikely. Yeah, tariffs hurt. Yeah, government spending cuts hurt. But that maybe still takes us to like 0.4. 0.4. So not a comfortable place to be, but the market does not appear to me to be acting like it thinks a recession is imminent. And as such, I am not seeing necessarily a panic bid move into the treasuries. There is some, like we have seen more of it than usual, which is definitely important for us to note because it's become a stronger flow for us in the treasuries as of late. It's kind of been the winning trade lately. But I'm not really seeing like this really strong, real buyers coming in and converting all of their money into bonds. Doesn't seem like that's happening. And bonds are really only just back to the levels that they were in December. And if we were going to have a recession, I would expect bonds to like explode higher from here. Jeez, if you think the market is bad in the USA, imagine how bad it is in countries like Spain. Unemployment rate good 5 percentage points higher. My gosh. Okay, yesterday in the hockey game. Watch this from the hockey game. I don't know why this fight started. It seemed kind of weird and out of nowhere. But this guy right here in the white is gonna like do a jump punch on Kesselring here. Watch this. Boom. And then Kesselring just absolutely destroys the guy. So I think Kesselring really won that fight. But I'm going into the comments and they're saying Kesselring shall now be known as Kryptonite then. Because they were calling it a Superman punch. That's funny to me. Oh, what a game. We lost, but it was a good game. I guess they are going to bounce off of the, I don't know. Look right there. So I've always said I can't predict if it's going to be this one or this one. Lately it's been this one. But that was on the other side. That was when it was like it was going up and it would rest and it would come back to this one. So like it's interesting. It's interesting. You should trade it? I don't know if it is really like the problem I still have is when I backtested it, it didn't turn out like that was a good trade. I never went back and tested like, does it actually make a more effective exit? But that would almost certainly make a better exit than a straight like set target and loss or something like that. But I guess I would want to compare it to like a time exit. You overdo it with the backtesting. Well, but the backtesting backs up very much what I think we see with it, right? Like, it coming up to that line is not necessarily a good trade because it reacts to one of those lines and you can't necessarily be sure which one. And I think it kind of makes sense with like the way things are going. Like, okay, if we had a big down move and things are just kind of rebalancing, and that's the point at where it's going to kind of be rebalanced, then that doesn't necessarily make that a good entry point, right? That just kind of means like that trade is done. The real trade was trade it on it coming back. Now, if it was like it was below the stop out line and I really thought there was going to be a reversal, then maybe that would be a good probable trade setup, right? I think it's misuse. I think it's misuse of the tool. You can only think about technical setups. So you want to think when X, Y, and Z are all conditions met, I'm going to go and I'm going to get in. And on short time frames, that just doesn't work very well. So instead, what I'm doing is I'm looking for an edge in the expected flows. If I don't have an edge in the expected flows, then I'm not going to touch it. Well, in this situation, I suspect that the S&P 500 might have a big recovery today. But kind of hard to know for sure. So I need to wait and get a little bit more information suggesting that that's what's happening first. So what I've seen so far is just kind of like it's mean reversion. It's not, this just does not suggest a trade. But look, you can go download it and you can try trading off, taking it as an entry and see how it works out. And if it works out, you come and send me a picture or something. Go tell everybody on social media so that they go buy it. Well, that's not saying the low-key way to tell your audience it's not worth buying it. So it's a low-key way to tell your audience, don't use it for entries. It's a good guide for what is the current market situation. It's a good guide for where you might want to take profits, but it does not produce effective entry signals as far as I can tell. If you think that it does, then show us. You kind of feel like the treasure market has really gone quiet after we reached that, by the way. It's a good trend up until that point. Right? I don't know. One of the things that I hate is I feel like I'm talking defensively. But it's just, I want people, if somebody's new, they've never been here before, I want them to understand what they're looking at. And so far, this has been a really, really great example that, yeah, we came back up. But since we touched this, it's just been flat through here. So the action in the market right now. Oh, sorry, I'm not even showing you the chart, right? Yeah, we had a bounce. It came right to that price level essentially, and then it's just gone dead. I'm just trying to save you a little bit of grief, because if you had taken that either here or here, you'd still be sitting waiting in something forever. Versus if you had entered down in here and then you exited off of those points, you'd be like, oh, hey, cool, I got a good exit. And then like, yeah, the market has kind of died. So maybe that trade was over. It's the most effective technical tool I think I've found. but it just doesn't very good for entries. And I kind of think more broadly that technical measures overall probably aren't going to be good for entries anyways. Octavia says we are in an inside day. Yeah. I mean, I do kind of think that there's a good chance that we could see some fireworks when the S&P 500 opens, so... S&P does look like it's maybe turning up a little bit. Still not quite seeing what I want to see on the DOM though for me to go short. As I mentioned yesterday, there are significant moves in price, yet the delta can remain flat. Yeah, and I explained that like to you 5 times now. You're really making a straw man argument by saying, oh, sometimes price can move without cumulative delta moving with it. Yeah, because limit orders can pull. Limit orders can absorb it. It could be a move because of a correlated asset. That's part of why you're watching the cumulative delta, so that you can see those things. Because if all you're seeing is the price, then you don't know that that's going on underneath. But nobody ever said, oh, just look at which way cumulative delta is going and then take a trade. Right? Like, yeah, the price can also move when you have a little aggression and more liquid being added on the support side. Yeah. Honestly, a lot of movement really is just robots repositioning themselves due to a correlated asset. And a lot of price movement is just random. Like, the market makers will inject randomness into it. They literally have like random number generators in there that kind of tell them to adjust the bid and offer a little bit randomly. That helps their strategy. Well, you do it anytime, but you point to it where it fails and says, see, it doesn't work. Well, yeah, but I'm also generally saying that because, like, I have a larger backtest to say it doesn't work, right? I wonder if we were better off looking at the heaviest weight stocks to figure out order flow on the index. That's a really good question, Gus. That's a really good question. Because here's what I found when I was watching cumulative delta on stocks. was that you could have a stock and it could be moving up or down, and it would be moving primarily due to a correlation with the index. And meanwhile, you could have the actual order flow underneath of it be selling all the way. So the instance that I spent the most time looking at, that I looked at the most closely, was a move in GameStop, where there was a huge move up the day before, and then they were kind of continuing the move that day that I watched, and there was a ton of volume on it. And throughout the day, GameStop mostly matched with the index, but the order flow was selling the whole day, and then the next day it dropped hard. Dropped super, super hard. And it was kind of like, well, you could see all of the smart money, all of the really big orders in GameStop that day were all selling. So we shouldn't be surprised that it dropped the next day. So it's really the same thing that we're doing here in the treasuries, right? In the treasuries, I'm watching the Japanese yen and I'm going, oh, okay, well, we just moved there because the Japanese yen moved down. But I didn't really actually see volume coming into it. Versus I could potentially see volume really coming into it and it still not go the way that it should because they followed the correlation. That's what happens in stocks. And when that happens, it kind of ends up being like, maybe that market selling is a better indication of what the actual sentiment in the stock is than the price. And I think theoretically speaking, everything that we know about this suggests that that's probably is the case. I haven't seen anything more correlated to ES than the advanced decline chart. When you go and you get into some of those measures like tick, there's actually some really interesting statistical stuff that you can do with it. That when we went and we back tested it, it suggested that there was really something to it, but that it was an inefficiency in the market that was already taken out. What I've noticed sometimes is that there's this sort of ballet in order to drive the index a specific price level, and when everyone has kind of reached their support limit on the stock's price would move in the opposite direction once everyone kind of reached their limit. Well, I think another thing that's broadly going to happen is if a large meta order is being executed, the point at which the liquidity gets exhausted in one stock is going to be roughly the same spot as the other stocks. So if it's a meta order being executed broadly across the index, they'll all kind of come at the same spot and back off. So I think more broadly, reading the order flow in stocks is probably going to be a different thing. You're going to really have to watch the correlations, but I also have a lot of evidence to suggest that reading order flow in stocks would be more effective than reading it in futures, simply because the data is more available in futures and there's more people competing for the edge. But my point is they don't always reach that limit at the same time. Okay. Well, I only had it for a week, so I think that there would be a lot of things that we could study with it. I want to know what... So when the treasuries kind of, so we were up in this zone here, kind of went dead. We did have an impulse down. It was only a teeny tiny... I mean, for that much of a decline, that's not very much volume, but we saw a really big drop in the Japanese yen. And so I think that I want to know what's with that. Why did the Japanese yen drop like that? What does that mean? Okay, so if price is at a certain spot, like right now it is at 111.06 half in the 10-year treasury, and let's just say that for some strange reason, because I have inside information, because I am an inside trader, I know that at a certain time it will be at 111.16. Let's say that at the top of the hour, so 10 o'clock Eastern time, let's say that at 10 o'clock Eastern time, I know that price will be 111.16. How many contracts should I trade to make the most out of that move? Because as I buy it, that's going to make price move up, right? And if I buy too much, then it's going to go beyond the 16. And then when that time comes, it's going to get pinned back down to 16, and I didn't make as much as I could have because I traded too many contracts. Right? So there is essentially an optimal number of contracts to trade to take advantage of that move. And we can calculate that. And the study, you want to go and read where they kind of first thought about this scenario, is called Informed Trading in a Continuous Double Auction by Albert Kyle, 1985. Now, his model has some flaws in it. It doesn't factor in the square root law of meta order impact. It doesn't, if you traded that amount, the optimal number of contracts to get to 16, you would be trading like the majority of the volume in the market. So somebody would almost certainly notice you doing something if it came to that, right? But the point is that if we have like a real edge and we know where it's going to go to, there is an actual real limit on the number of contracts that you can trade on it. And if you trade too many contracts, then it goes past it. And this is why technical analysis is generally on short time frames is so ineffective. Because if you have a real inefficiency there, you start trading it, you're going to take it out of the market. You say, oh, I'm a small player, yada, yada. Yeah, but if it's making money, you're not going to be a small player for very long. You're going to size up. Or if it's out there and it's public, somebody big is going to find it and they're going to start trading it and until it's gone. So companies like Renaissance Capital, they put a lot of effort into trying to quantify how much the market can handle at that time so that they don't tip the market off to what their edge is. That's why Renaissance Capital has a limit on how big the fund can get. Okay. So there can be an inefficiency in the market that is created by the actual structure of the market. That means that inefficiency is always going to be there, but there's still going to be a limited number of contracts that can actually trade that inefficiency and make money from it. And that's why I'm saying there are some things that we've seen in relation to tick and some of those indexes on the index, essentially, that you can pay for, that kind of suggests that there is a market inefficiency in there, but if you try trading it, you're not fast enough to get it. And basically what you can do is you can look at the tick and you can put like a super smoother on it. Or you can use a simple moving average, but the super smoother works better. Super smoother works better, and you kind of trade based on whether that super smoother is rising or falling. And when you do that and you play it all out and everything, you get some unusual statistics, but the back test comes out basically break even. Which is why I say looks like that there's something there, but that it's already been arbitraged out of the market. Man, it's so funny because I know exactly what he's going to say, and I already like like made the comment, and like he just ignored it. Yeah, your 4 lots isn't necessarily going to move the market, but if it's a real edge, you're not going to stay at 4 contracts for very long. Can you imagine? Just think about it for a second. If I went long at 08, and I got out at 16 because I'm an insider and I know that it's going to be at that price, right? Okay. That is basically $500, isn't it? 8 times 16. Or sorry. 16 times 15.625, right? Oh, 250. I'm wrong. It's 250. Okay, so you do that once, you made $250. Right? Come back tomorrow, do it again. You've made $250. You've now made $500. And guess what? $500 is enough for your broker to allow you to trade 2 contracts. So now you do it with 2 contracts the next day, and you made $500, which means that I can add another contract. So then you do it the next day with 3 contracts. And you have now made $750 on that one trade. So you can add another contract and do it with 4 contracts. And now that you've done it with 4 contracts, now when you make it, you make $1,000. So you can add 2 contracts. Right? And it just keeps going up, right? Like if it's a strategy that actually works, you will size up very quickly. As soon as you get to the point where the trade is making enough to give you more contracts from the trade, like it just goes exponential. And that is why most successful traders that actually do find an edge like this, you go and you read interviews with them and things like that, they're always going to say that like the market caught onto it and they didn't adjust quickly enough. They size up too quickly. Back to what you said about hedge funds and their size. Couldn't you overcome that by trading across multiple assets? Maybe. Like you could say, I know that there's going to be flow in this thing, and I know that that flow is going to affect this thing, and so I can take some contracts in this other thing as well. Sure, but there's still an upper limit on it. That's why Renaissance Capital limits the size of their portfolio. First time viewer, is this, we don't really do cryptocurrencies, but what we're doing here is going to help you regardless of what instrument you end up trading. Are you in June? No, I'm still in March for ES. And I think that we're supposed to be in March until tomorrow. Right? Let's see here. No, actually for another week. So it won't be until basically the 19th and 20th that we roll over. No, I don't think it has. The roll happens 2 days before the option's expiration, which would be the third Friday, which would be the 21st. So the roll happens on the 19th. Yeah, it's not the same as the Treasury. The Treasury rolls 3 business days before the last trading day of the month. So they rolled like 2 weeks ago. I suppose we can do a sanity check here and say ES June is M. ESM 25. Big multiplier 4. Okay. Let's come in here and just change the settings so that they're the same size. I don't know why I don't have it set up like that. That's okay. 16. Oh, maybe I'm doing 14 on that one. There we go. Okay. So now that they're next to each other, what do we see? There's significantly more volume in March than there is in June. Or rather, liquidity. So they definitely haven't rolled yet. Somebody told me that they would measure cycles of volatility, which is more reliable than price cycles. I don't know about cycles. The big inefficiency in volatility that is known is twofold. One, that volatility clusters, and two, that realized volatility tends to be less than implied volatility. So when you've got volatility is exploding, you can kind of guess that volatility is still going to be high during that period. And that might be what they call a cycle. But it clusters, which is to say that like when you're going to get like the high volatility events is hard to predict. You trade ZT? Oh, that's interesting. I really don't know if it makes sense to trade ZT. I think that if you want to trade the smaller one, you trade ZF. But I don't think that trading the instrument that has the pro rata fill is going to work out very well for you. Fabia says, I agree with you, short bias. Well, we got a little bit of a short there, didn't we? And I kind of said, I don't like what I'm seeing in the volume with it. And it looks like it's mostly due to the Japanese yen. So I don't know why the yen fell, but we got the E-mini opening up in about a minute here. I thought all treasuries had the same. Nope. ZT uses a hybrid pro rata fill. So like 60% of it is filled based on how large, what percentage of the overall queue your order is. And then the rest, the 40% is done first in, first out. Can you give a small explanation of what you're trading? So what I'm doing is I'm taking in all of the information that I have that day that may potentially predict the flows that I'm going to see coming into it. I add them all together to see if there is an expected imbalance. And if there is an expected imbalance, then I'm going to come in here and I'm going to watch for signs in the order flow confirming that that imbalance is actually coming through. And if I see that, then I'll take a trade. It says he measures it off levels. Well, that sounds like something that we would have to prove. Nice indicators to interpret market orders. Thanks. Why would Ann Steffa be saying that? I'm confused. Well, the open in the S&P 500 looks pretty tame so far, but there is about a 4K imbalance net selling in the equities. So it kind of looks to me like the sellers want to give another go at this. So let's see what they do. That does seem to be pushing the treasuries back up. What's this? To Republicans, conservatives, this is Donald Trump. To Republicans, conservatives, and all great Americans, Elon Musk is putting it on the line in order to help our nation, and he is doing a fantastic job. But the radical left lunatics, as they often do, are trying to illegally and collusively boycott Tesla, one of the world's great automakers, and Elon's baby, in order to attack him and do harm to Elon and everything he stands for. They tried to do it to me at the ballot box, but how did that work out? In any event, I'm going to buy a brand new Tesla tomorrow morning as a show of confidence and support for Elon Musk, a truly great American. Why should he be punished for putting his tremendous skills to work in order to make America great again? Okay, it's illegal to do boycotts, but okay. There is like a vandalism campaign against him, and that's illegal. That's kind of interesting that that's bothering him enough that he's going to go buy a Tesla. Okay. Anthropic CEO Dario Amodei. In the next 3 to 6 months, AI is writing 90% of the code, and in 12 months, nearly all code may be generated by AI. I call bullshit. Where do you check the fill algorithm? Yeah, okay. We'll do this again. CME matching algorithms. Matching algorithm overview. For additional technical details, see the client systems wiki. Supported algorithms. This explains them. And then where was the next link? Or was it back here? Oh, here we go. Let me start over. CME matching algorithm overview. Scroll down to the bottom. GCC product reference sheet. And then we scroll down and there's an Excel spreadsheet. Already downloaded it. I'll open it back up again. I did close it, didn't I? Yeah. Oh, maybe I did not. Because it doesn't like that. There we go. It's got to scroll all the way down to the interest rates section. You want SR3, right? Yeah, you want SR3. SR3's 3-month SOFR futures. It is using A, which is, come back here to the wiki. Allocation. The allocation algorithm is an enhanced pro rata algorithm that incorporates a priority to the first incoming order that betters the market. If priority is established, the aggressor orders are first allocated to the top order until the order's quantity is exhausted. Additionally, there is a minimum pro rata allocation parameter of 2 lots. All fills are rounded down to the nearest integer, and an allocated trade quantity is less than 2 lots. It is rounded down to 0. Excess lots are allocated first in, first out. So it's kind of pro rata. Whoa, that was a big move there in ZN while I was doing that. What was that about? Oh, the S&P 500 turned up really conclusively. I'm really tempted to take it there, but I think I'm going to take a second. I'm going to foam roll my back here real quick. I'll be right back. So what we were talking about, the developers probably make it that way so they wouldn't create their own replacement. Yeah, I mean, what I've seen more broadly, oh boy. Now that was something. Oh, what? I clicked and it didn't hit the order. So this one is a little iffy because I'm not necessarily seeing a like strong imbalance, but we did get a pretty good move there, and like the market is definitely like lighting up with activity. Oh no, right there. There we go. That's a little better. I think I should have gotten filled by now, so that's making me a little bit nervous. Big iceberg there. That's good, I guess. That's right. We've got Jolts. Thank you for reminding me. I totally forgot about that stuff. Top of the hour. Well, 20 minutes. Yeah. The S&P 500 is getting super whippy. See that? That's why the treasuries are coming back there so hard. You don't think I'll get filled there at 06? I think so. Like that immediate, when it was like, it was sitting there and I had a good spot on the bid and I couldn't even get 200 lots to hit into it. When we were seeing a lot of selling before, that was immediately a warning that there's something wrong. But it was super short-term thing, so might be okay. Come on. You're not really getting a good offer here. You're not really getting orders selling into 06.5. There we go. That's a little better. Come on. Better. That move seemed like a better impulse, so I'm going to hold that second contract. See if the S&P 500 is able to move to a new high above 56.25 a little bit more decisively, which is probably what we would need to form a new low here in the treasury. So what was the lows before the open? It was 04. Now I missed AO saying you missed the selling. I think it worked out. I think it worked out. See, I'm thinking if the S&P 500 is able to pull out a recovery here today, it is looking like a good possibility. I don't think that they've done it conclusively yet, but it's looking okay. That we'll probably get a new low here in the treasuries, and I should see about a 10 to 15k decline in cumulative delta. So I want to see us at negative 15,000. So there's still plenty of delta to come out short. In fact, we're still only just to a point where like I'm seeing enough of a change in delta for me to be like, okay, maybe we can take a trade. And you can see the S&P 500 is still middling around there. I'm wondering if they need jolts for it to come through. Now, what is the expectation for jolts? 7.6 versus the previous reading of 7.6. I think that's wrong. I think it's going to be higher than that. I think that there has been a slight uptick in the last month in job openings. So what I saw was an uptick in February that very quickly came back down. So I think that February should be more like 7.7. Well, I don't know. I don't know how big of a change it would be. Maybe it'd be more than that. Maybe 7.8. But then in March, see it come back down to 7.6. Okay. Yeah, so there are a few steps here where it seems like that the bid just kind of melts. But you see, they're kind of waiting. They want to see the S&P 500 do it before they really make a big move in the treasuries. Yeah, see, 800, 700. So the bid is just kind of pulling out of the way for the most part. About 3k negative net negative deltas so far. All right, E-mini's like right on the edge there. Come on. Come on. There you go. There you go. Okay. Yeah. Did you see that when they touched 30, all of those orders pop through in ZB? Oh, 4.5, a regular session low, but the extended session low is 0.4. So we're not to the point where I would expect to see like lots of stops and things like that. In fact, if I had a third contract on still, I think 0.5 would have been a good spot to take it off. Just because it's like, you know, they're kind of still doing this thing where like the market maker is pulling out of the way, so that might be the edge of that range. Well, that last 10 minutes went pretty quickly. I don't remember what we were talking about. Anthropic CEO says that in 3 to 6 months, AI is writing 90% of the code. Yeah, I really, really doubt that, because everything that I've seen so far kind of suggests to me that the AIs are pretty good at writing boilerplate code for like really common use cases and things that are like already done. But anything that you start doing at a company, it just falls flat on. They don't have enough context. They're not accurate and error-free enough. Just doesn't seem like a really viable. Like, you're not going to replace the software engineers with it. I think that you would need to see some pretty significant still innovations in order to get to the point where like the AI is generating all the code. Yeah, I would hope not. It is not already better at coding than the humans. Absolutely not. The number of people messaging me because they can't get the code that the AI gave to them to work says to me that it is definitely not better. Actually, so that thing that was happening in the Ninja Script channel yesterday is like a really, really good example where they wanted to do something like they wanted to make a drawing tool for order flow. And, you know, the AI was kind of running them in circles, doing things that just weren't really working. Wow. Okay, so that was some stops, but still only 1,000 lots in there. It would be a little surprising to me if they just stopped at 04 at that point, but they're being a little skittish about it, so. Anyways, and so basically he's trying to do something that Ninja Trader was not meant to do. The robot's probably not going to figure it out for you because the robot is using context and things that other people have done. So if it's something completely brand new, it's not impossible for an AI to give you that stuff, but it's a lot less likely. And in that particular case, it was just not giving him anything useful. No, I don't like that. I don't like that at all. But I think that I just have to sit tight. Because I was thinking about, you know, sometimes I'll have an order sitting there at 04. Just anyways. But I didn't. And it would have gotten filled and it's kind of flipped back around. I do kind of think, though. Okay, so first of all, they only just touched the extended session low. And there's plenty of room below us if we're going to start retracing some of yesterday's actions. So, like, probably all the way back to 29.5, perhaps? Do we have that much room? Yeah. Okay. Yeah, 29.5. That's a ways away, though. The errors are too much. I'd rather code the bot, my bot myself. Yeah, the same here. For everything that I've done in Ninja Trader, at least, it's faster for me to write it myself from scratch than it is to try and use the AI and fix all of the mistakes that it makes. And you really get into big issues when you start doing things like you take the code from like the whole vibe coding thing, because you're just stacking errors on top of each other. But like I said, I think the one of the bigger problems in the professional world right now is that the LLMs don't seem to have enough context to fit a reasonably sized code base into it. So they just can't see enough to really work within your system very well. You get to the point where the code base is too big for the LLM to deal with too quickly. So that's the first big innovation that they would have to make. That's one that I think that they probably will make, but right. And then the LLMs, there is kind of like some like I would say that they are kind of doing thinking, I guess you could say, because I think that thinking is kind of like, well, it's doing token pattern matching, but that's kind of like what it's doing at the micro level. And this is just like with order flow and everything else. When you kind of apply these things over, thousands of neurons, you get larger emergent behavior that you wouldn't be able to expect just from the individual nodes, right? So I think that there is some reasoning going on in there, but I don't think that they do outright logic and like error verification sorts of things. And I don't know how they would accomplish that. But it seems to me that the human mind has some sort of error checking mechanism involved that the LLMs don't seem to have yet. Because like the human mind does hallucinations too, but that you immediately know that they're hallucinations, right? That they were figments of your imagination. So those are some of the things that I think that they would have to overcome in order for the AIs to like completely take over coding. And even then, I think that it would kind of be more like if I'm writing a front end for a client, like a product owner or somebody like that could do some of that stuff, but then you're still probably going to pass it on to some sort of back end engineer. Because then there's this other part of it, which is the strategy, right? Like I'm going to write my applications in a certain way because I understand that this is the problem that tends to come up and this is this organization problem and things like that. And the AI is not really doing that with all of its code. It's doing the pattern matching. And so you're going to get to a point where in order to have a really scalable system, you're going to have to have humans involved. Yeah, Jolts is in 2 minutes. I'm going to keep this on for Jolts. Because I think that the Jolts number is actually going to be good. We'll see. Might be a big mistake. YOLO! If there will be a new career path for humans, debugging engineer, I think that I will be great at that. Okay, the liquidity is pulling. They're pushing it to the lows. I don't know, because this could be really complicated because the way that I think that if Jolts is good, that the treasuries will probably sell, but I'm not entirely sure what the treasuries will. Sorry. Why am I mixing this up? I think that the treasuries will sell if the Jolts number is good, but I'm not sure what the E-mini will do. So this could get complicated. Put an order down here just in case. Booyah. 7.74. So definitely the treasuries moved down. S&P 500 is still being a little middling. In fact, there was actually a little bit of a sell there initially, so. Sim throw on an ES Mini. I should be able to get a good fill at 111 evens, but as soon as I say that, this buy impulse comes in and tries to screw me over. Okay. Okay. Normally, an impulse like that would immediately have me out. But, well, maybe I should have listened. Trump speaking. Gosh dang it, Donald. Okay, so Donald Trump is saying that he has instructed the Commerce Secretary to increase the tariffs on steel and aluminum coming into from Canada. Will go into effect tomorrow. That is why it's retracing. So I think I scratch it. Shit. Damn it, Donald. You couldn't have just waited like another 5 seconds? Good grief. You know what? That was so worth it for the entertainment value, though, wasn't it? It was a good trade. Just yeah, you can't predict when Donald Trump's going to talk. When I saw that impulse, I said normally I would do that, but I kind of was like, maybe in this situation I'll be okay. No, I was totally off my rocker, man. When you're in a position and you see a strong impulse against you, get out, get out. I haven't made that mistake in a while, so I'm a little mad about it now. I guess, like, I did scratches, so it's okay, but... We will shortly be declaring a national emergency on electricity, says Trump? Well, if this goes the way that it seems like it usually does, though, like, they're gonna, like, stop, if I try to get in again, they'll stop me out. And then as after we give up on it, then they go back down to the lows later. Still, I called the Jolts job openings really well, didn't I? I got that one really good. I was like 7.7, 7.8 with 7.74. Okay, so now they are busting through that cost basis. Buy side cost basis is 14.5. So if they were to get up to 14.5, I would probably expect a little bit of a pullback. I don't know if that's a trade that I should take up to there or not. The volume is definitely there. Actually, I think that I can. No, it's too late. At 08, I probably could have taken it. I probably could have reversed on that. Because if we're going to expect like all of the delta that's come through to flip now on this, then yeah, I think you could get to 14.5. But it seems to me that too much of that volume has already come out for me to really feel comfortable taking a trade on it. Ooh, man, the spoos are getting screwed here, aren't they? Wow, that's not enough to push it to an imbalance. What do you guys think? Should we change it to the 55? Not 55. Let's do 50. Let's do 7.5. Tomorrow. No, I didn't make money. I scratched it. Actually, it says I lost a tick. I lost a tick. It was a good trade. It was a good trade. It's just kind of bad luck, I think. Okay. No. So can you believe that, by the way? Okay, so I had one contract at evens. It did not get filled. There was the big impulse against me. I ignored it against my best judgment and scratched it when it came all the way back up to 8. Yeah. Too greedy. Well, but I mean, look, I don't really think that there's anything that you can do to predict that sort of a thing. I really should have, when I saw the flow, when I saw a really aggressive flow coming out against me, I should have gotten out, but I wouldn't have gotten 111 even. Right? So probably the best that could have worked out for me would have been like getting out at 02 or something like that, right? It's kind of interesting to me that it's still sitting there at 08. Market makers are really pulling there, huh? Ooh. Well, that's probably too volatile of a market to touch now. You know what else makes me mad about it? Is that Donald usually helps me. You know? You should aim for 6 ticks a day. I could probably do that. I don't know if it would work though. Like, okay, so if I had it like target is 6 ticks, stop is 6 ticks. I think where the strategy really works is that there can be situations where you're right and it can really run. And you should really try and take advantage of those as much as you can. But like I said, when it comes to outright trading, you know, there's only so much you can do about it. We want to think that we should be able to, you know, that there should be a perfect solution to everything. That there should be a perfect point for me to get out every trade and some way for me to always get it out perfectly and then things like that. And the reality is, no, there's not. 3-tick stop, 6-tick target. The reason that I'm saying that is any strategy that I've come in and I've back tested and I have set stops and targets, putting the set stops and targets essentially make the results of the strategy largely about the stops and the targets. So in order to get something that performs differently, you have to have something that uses something else. That's why when I am doing like just straight tests to say like, okay, does this particular thing make a good entry? Well, again, if I'm just testing the entry, then I kind of want like the most neutral exit I can possibly get. And having set stops and targets is not a neutral exit. If I do that, then the results that I get are mostly about that stop and target. So I use a time-based exit instead. And that gives me a good idea of, does that signal actually predict some sort of a flow? I think if I was going to do it like most optimally, what I would really want to do is to say, when you have a signal, what is the net cumulative delta in the time period after that? Because there's a lot of noise in price. So if I can just look at the orders instead, I should be able to get cleaner, you know. So just like in this situation, like, okay, like if I wanted to back test, how are we going to move based on jolts, right? Well, if it was good, we sell into treasuries, and that's pretty clear. But if you're doing a back test in this situation, you might not see that in the stat because the Donald Trump thing comes along too. But if I were to say, like, okay, hold it for 30 minutes, and in that 30-minute time, what is the maximum excursion in terms of cumulative delta that you got during that time? That would give me a better idea of how well it works. That makes sense? But since I don't have that, I just have to use price. I want something that's kind of neutral. So set stops and targets doesn't really work. Okay, now I can take it a step further and I can say, okay, I have an entry signal that I know is good. How do I exit? I need an exit signal that I know is good. So what I'm typically doing is there are places where I know that there's going to be more liquidity. So that's kind of what I was doing at 111 even. It kind of helped that it happened to be at a $500 profit as well. But I know there's going to be a lot of profit taking going into 111, and there's going to be a lot of stops after it because it's an even number. So I'm trying to take advantage of that. Should I have had it one tick higher? I don't know, because usually they do clear the evens number. Like that number is very likely to clear for some reason. Because those big guys, they have the liquidity there. They want it to happen, right? So that's kind of what I was taking advantage of in that situation. But then there's also, when there's a large impulse against you in cumulative delta, that's also an exit signal. It's like a counter signal that I ignored. And I was justifying it in my head. You heard me say it. I was like, well, in this situation, I kind of think that the market is so volatile and the S&P 500 is going to be going back and forth and so forth that it might be normal. I might be expected to see a brief like pushback in volume and then them still eventually come back down here and go low. But in that case, that's not what was happening. It was a conflicting headline. So I think lesson learned to just never ignore it. I guess the other thing though is that I was kind of surprised that it was a headline. So I might need to watch that one a couple times again, just because it seems like my calibration's off a little bit. that should have triggered me and it didn't. So that's what we can do about it. And these things like set stops and targets, that's not going to help you. Well, they didn't make it up to the 04. They sure have traded a lot at 08. %of all code in Google was AI generated. I call bullshit on that. They expect 85% of all programmers in Google will be replaced. Who's saying that? There's no way. By the end of the year, you're crazy. Okay, Trump. Just to repeat that he's going to place electricity tariffs on Ontario because they're doing it to us. So that subsequent Truth Social post seems to have driven the buying again. I could try and jump on the bandwagon with that one, but I think that above 08 is probably too late. Especially since I'm only seeing about 3,000 more contracts that could possibly come out long on like a full stop out. They have to be people really coming in and taking new positions. So are we seeing any change in the yield curve from this? Not really. There was some earlier, but it was very slight, only by like 3 ticks. Okay. I should put Trump in the title because anytime that I put Trump in the title, it gets tons of views. Trump screws over my winning Jolts trade. Trump makes markets go tits up. Booyah. Yeah. I mean, Uzi, are you kind of have the same feel that I do, that like we've been through this before and it's just kind of all entertaining? Like when I'm watching the S&P 500 go down here, and it's almost 10% now. I can remember many times past, thinking, this isn't good. That is wealth destruction. I'm sure lots of retail traders are going out. Like, it's kind of a sad thing. And this time, I just don't care. I just don't care. It's not triggering me. It's like, yeah, this probably was going to happen. And it's not a huge deal. Trading a Trump administration was, still is, and will continue to be a headache. Well, I remember doing pretty well off of Trump himself in the first time around, though. That's the other thing. I guess because I don't have Truth Social open here like I do TweetDeck, that, you know, I'm probably a little bit slower on the draw on what Donald Trump is saying to work with it, you know? But if you're doing well on... No, but I don't know if I was luck. I think that there was many situations where I saw the tweet and was able to react to it before the market did for some reason. I don't know if it'd still be like that or not, but... I seem to recall getting screwed over during that time period over other things, but generally doing a good job with Trump. And that was kind of one of the first things that really encouraged that, like, oh, okay, I like this approach. Because I think that was largely before I really understood the whole empirical, you know, like it wasn't until 2020, 2021 that I really understood the more empirical view of the markets. But trading Trump, that was, you know, I always said, well, you can't just ignore the news because there's plenty of opportunities available in the news, right? And that was the first kind of signs to me that, like, I like that approach. There was some value to that, right? I don't know if I would have dug deeper and found all of the things that I did without some of that stuff before, you know? Trump, the destroyer of retail trading accounts. Well, luckily I had, you know, this is the other thing is that, like, if you really are the informed trader and you really do have an edge, like, you know that things are going to come out a certain way and you're right, and then something comes along to screw it up, like, the losses are probably going to be limited. And you can flip around. So I think in that case, that was a situation where I should have flipped around. Should have gotten out earlier and flipped around. Too late now, but... Well, they're above the opening range highs, so... Chassis? You know, another thing that keeps crossing through my mind is that I find the timing of it all a little bit suspicious. If you were of the opinion that Donald Trump was intentionally trying to crash the economy to get lower interest rates, which is what I think a lot of people think, you know, you would maybe know what the Jolts number is going to be and be like, oh, okay, well, we don't want the market to rally off of that, so we're going to have to smack it back down afterwards. It's totally reasonable conspiracy theory that that's what they were doing, right? But I do think that it was just a coincidence. But if it wasn't just a coincidence, if that was intentional, then Don, can you, like, please just let me get the one contract off first? Good grief. It was literally like a few seconds more, it probably would have gotten filled. Oh man. It's fun stuff. It's all sim orders. So it's just entertaining is what it is. Bloomberg says U.S. job openings rose in January, indicating steady demand for workers as the Trump administration took office. A slight uptick in demand for workers, but I really think that like a large portion of that 7.5 million should be like, I think that at least 40% of it was fake. Okay, stepping up to it. If they just outright cross the line, then that's going to be pretty interesting as well. It looks like they're going to. What do we got now? 8K. Huh. Okay, so I was kind of like when it was well, it wasn't at 08. I think it was somewhere more like in the 10 or 11 area. I was like, I don't think that I can really get behind this now because I've seen too much volume come through and I'm not sure that I can expect even more to come out. But we have had about a net 10K contracts since that time come in. I have no clue how far it can get. It sure seems to me like that the financial market. I'm going to have to make a video about this, a short about this, because this really is an interesting situation. It really seems to me like that the market was kind of pulling something out today. And Donald Trump smacked it down at exactly the right moment to cause maximum damage. There it is. I don't know if we should count that one, to be honest with you. Because usually in the treasuries, it is like to the tick. But maybe that's just because we have a more volatile market. The spread is wider. You get this, you kind of get this thing now today where it will like go through the lines, have a really hard time staying above it. So that's kind of curious. I haven't seen that before. It's kind of curious that it did it multiple times though. Might be something to that. I don't know. Go VIX. Trump makes ES drop below 5,600, forces US recession. It's still not a recession, I don't think, but it could get worse. That's the thing. Is like at this time, I'm not expecting a recession, right? But eventually, you do enough bad things, it will be, right? No, those are not MACD lines. So what that model is doing is it's looking at where orders were filled in the past and calculating like an average market maker positioning based on those fills. So it's an overgeneralized estimate, but it ends up being really, really useful. And so the way that you kind of use it is that in a range-bound day, we will kind of just bounce between these two lines. If sellers are in control, then we're going to stay below the orange line and, you know, possibly have like mean reversion plays back up to it, right? Like there seems to be a strong tendency for them to come back to the line like this, right? So in this situation, for us to be down here and then get above the blue line, that's a full reversal. I would not consider it a full reversal until it gets above that. Because to me, a full reversal is the sellers were in control, but by the end, the buyers were in control. Right? There's also these dotted lines. And those dotted lines are kind of like stop out zones. So that is where there is no way that the market maker can possibly be making money anymore. And it's very difficult, like you can see right here. Although I don't know if this is a good example because it's so early in the morning. But it's very difficult for them to stay above or below the dotted lines. Yes, so it is a custom indicator that you can download at speculatorseth.com for NinjaTrader 8. And it basically estimates market maker positioning. So it's really useful for take profit zones because it kind of gives you a spot where it's difficult for them to just go straight through it, right? I don't think that you can just take it as like there's going to be a reversal here or anything like that. Because when I've back tested that, it doesn't work. And it seems like that, you know, when it does fail, it's like a trend day and you're just going to get destroyed. So you lose too much when it doesn't work, right? But as a profit taking zone, it's a really good, safe place to take profits, essentially. I also think that it is really good at helping you to understand like what's really going on in the market, because a lot of people have this idea that like the market maker is completely in control of the market and he's the one that's making all of the decisions about everything, and that's just not true. That's really not what happens. The market maker is just trying to make money off of the spread and is really at the mercy of the market orders. So the only time that the market maker is really, really, truly in charge is in a market where not a whole lot is going on and there's not really big moves made by big players. So that is, again, why I don't think that it makes a very good, like, predictive entry sort of a thing, right? But it is telling you something about the liquidity conditions. So if you know what the future orders are going to be, if you're an informed trader, like in this case, I knew something about that Jolts was likely to be slightly higher than last month because I'm watching LinkedIn and I'm watching the jobs, and I can see that there was more jobs posted this month. So I was informed for that reason. I knew which way the flow was going to come out, right? The market maker is kind of at my mercy in that situation. And in this case, what happened was Donald Trump then came along and screwed the trade up. You know, hearing this, I'm just hearing something else about the tariff thing. Somebody from Canada responding to it. But I really feel that Canada is being disingenuous with this whole thing. So Donald Trump said, well, you're not doing enough to defend your border against fentanyl coming in and illegal immigration coming in from Canada. And you have tariffs on us. And so then Canada is like, oh, well, because you put a tariff on us, we're going to put a tariff on you. But the whole reason that we put a tariff on Canada in the first place is because Canada has all sorts of protective measures. So, like, they're all acting like that, oh, we were just minding our own business and everything was all great and free trade before Donald Trump came along. Bullshit. You've been playing this for like decades now. Like, just as an example, the amount of protectionism for the Canadian dairy industry is absolutely insane. It's absolutely crazy. So I just can't take them seriously when they're like, oh, well, let's just get rid of all of the tariffs. Because if you just didn't have the tariffs in the first place, we wouldn't be in this situation, you know? Like, that stretch was brutal, man. It is just a bad luck. I was on the other side of that trade once. Selling stopped after Jolts. ZB had a buyer at 2019. Yeah, see, you probably saw the buy impulse and joined that buy impulse. So it was I think it was a mistake on my part, right? I mean, to some extent, you got to say there's luck and like you're going to be slow, and sometimes I tend to be flat-footed, right? But it was a mistake because I know if I'm in a trade and I see a strong impulse against the trade, you've just got to get out. Because the inverse sine law, right? So there's a square root law with respect to the impact of a meta or large meta order, which means this is Q, and this is the impact of Q, and this is the impact that it will have as Q gets larger, right? So we have a move down, and then normally when the order ends, there's a short-term mean reversion period that goes twice as long, like this, okay? But if this gets short-circuited and somebody buys at this point before the liquidity has the time to recover over here, then this Q will move it even further. So here, this is Q. And this order, this order is negative Q because it's down, so it's sell. And this order is Q. After the short-term mean reversion period, we are actually higher, right? So that's why when you're in a trade and it's doing that and it's pushing and you're seeing the stops and all that sort of stuff, you've got to be careful. You got to pay attention to it, because if somebody wants to take the opposite trade, that is kind of like the optimal place for them to do it. And that's why you will often get these full reversals. This is rare. Hasn't happened to me in a long time. I haven't had to deal with it in a long time. But if you are able to get long right there, that is like one of the best trades you can get. So I probably should have realized what was happening and flipped around, but I didn't. I was flat-footed. Kind of tried to ignore it. But was like, nah, it'll come back down again. I think it's just doing shenanigans. Because, you know, it's an illiquid market, and there's lots of, you know, the market has been kind of scared lately and all these sorts of things. Nope, it was Donald Trump. And as soon as I heard on the news squawk that it was Donald Trump, then I was like, oh, that's what that flow was, and I immediately got out, right? Is the Jolts report? Yes, it was. It was at the top of the hour. So what happened was Jolts was released. I was in a trade because of Jolts. And then almost immediately after the Jolts happened, that's when Donald Trump started talking. That's why I was saying it's just kind of interesting and will fuel conspiracy theories because Trump really came in at exactly the right time to screw the market over again. So how bad is this for equities? Pretty bad, but just barely below the overnight lows. So, What's Larry Summers here say? The just announced tariffs on Canadian steel and aluminum are the worst trade policy yet. Increasing the price of key inputs for the U.S. manufacturing industries, who employ 10 million people, is what a U.S. adversary would do. It's a self-inflicted wound to the U.S. economy. ... Wait, is there more? Oh, it's a self-inflicted wound to the U.S. economy that we cannot afford at a moment when recession risks are rising. Yeah. How much of our steel and stuff do we get from Canada? Is that really that big of a deal? I don't know if it's really that big of a deal or not, but sure we will get plenty of analysis about it later today. I watched someone thought it was a good idea to ask Kamala Harris to speak at a major artificial intelligence conference. Oh, okay. Well, let's read what Zero Hedge said about Donald Trump talking here. Donald Trump retaliates against Ontario's electricity tariff, threatens to permanently shut down Canadian car makers, pushes for 51st state idea. What did the Jolts report show? The Jolts report showed that we had 7.74 million job openings compared to 7.6 million job openings the month before, and the forecast was 7.6. So they expected the job openings to not change, and it increased. So that's what I was expecting, because I'm sitting here applying for jobs every day, and I can kind of get a good idea of what the market looks like in that respect. So I had a pretty good guess that it increased in February, and I was correct. That's why I was in that trade maybe for other reasons, because I was also expecting the S&P 500 to try and pull out a turnaround, which was happening. That's what got me in the trade. Then I had enough profit baked in there to take the risk on the Jolts. And then I was correct about the Jolts, and I was just one tick short of getting my profit filled. So before Donald Trump came in and screwed it up. Well, that's what happened. Oh man, it was funny. I'm glad that I can laugh about it, because what a turn of events. You don't get one like that every day for sure. And Treasury, it's definitely slippery out there. The liquidity, even though the resting liquidity looks pretty good, a lot of that liquidity evaporates in front of price. 15 minutes left. Oh yeah, I was reading. I was like, what am I doing? Okay. Just when you thought it was safe to dip your toe back into the growth-challenged markets, President Trump took to Truth Social and unleashed a retaliatory strike against Canada, more specifically Ontario, for its ongoing tariffs and electricity price hike. Based on Ontario, Canada placing a 25% tariff on electricity coming into the United States, I have instructed my Secretary of Commerce to add an additional 25% tariff to the 50% on all steel and aluminum coming into the United States from Canada, one of the highest tariffing nations anywhere in the world. He's right. Canada has a lot of tariffs up. They do. This will go into effect tomorrow morning, March 12th. Also, Canada must immediately drop their anti-American farmer tariff of 250% to 390% on various U.S. dairy products, which has long been considered outrageous. Yes, this has always been on there. That's not like a recent thing. I will shortly be declaring a national emergency on electricity within the threatened area. This will allow the U.S. to quickly do what has been done to alleviate this abusive threat from Canada. If other egregious long-time tariffs are not likewise dropped by Canada, I will substantially increase on April 2nd the tariffs on cars coming into the U.S., which will essentially permanently shut down the automobile manufacturing business in Canada. Those cars can easily be made in the United States. The result is that the Canadian dollar dumped and U.S. stocks gave up their early gains. Trump then diverted back to his previous comments on making Canada America's 51st state. Also, Canada pays very little for national security, relying on the United States for military protection. Why are we subsidizing Canada to the tune of more than $200 billion a year? Why? This cannot continue. The only thing that makes sense is for Canada to become our cherished 51st state. Do you guys think that he's just trolling on this one? I kind of feel like that he's just trolling on this one, but like, I don't know if it really makes that much sense from like as a troll. I don't know. This would make all tariffs and everything else totally disappear. Canadian taxes will be substantially reduced and they will be more secure militarily and otherwise than ever before. There would no longer be a northern border problem, and the greatest and most powerful nation in the world will be bigger, better, and stronger than ever, and Canada will be a big part of that. The artificial line of separation drawn many years ago will finally disappear, and we will have the safest, most beautiful nation anywhere in the world, and your brilliant anthem, O Canada, will continue to play, but now representing a great and powerful state within the greatest nation in the world has ever seen. We are sure Mr. Carney will bristle with Trump's hurtful words. Israel and Lebanon are entering negotiations. I wonder if we'll see a move in oil from that. It doesn't look like I'm seeing too much movement yet. Lol, they are pushing the U.S. into a recession. Okay. We really kind of have to sit and think about, like, what are the different models of, like, what is Donald Trump actually thinking here? And which ones make more sense with the actual actions and so forth, right? And I think that one of the problems that you have in doing that kind of analysis is that some things can just be a coincidence. It might just be a coincidence that was when Donald Trump decided to tweet about it, okay? But if it was intentional, then I do kind of think that you have to say, nah, he straight up wants a recession so that interest rates will come all the way back down. We have been in a recession for 2 years and we're no longer getting cooked numbers. Oh, I don't think that we've been in a recession, but I do think that the economy has been a lot worse than it's appeared for the last 2 years, yes. And some very critical industries have, in fact, been in recession, have contracted. The tech sector has gotten smaller. Okay, so let's say that Donald Trump does get that recession. Does the economy recover before his term is over? Probably. But it might be more complicated than that. Like, I bet you that, I mean, that's certainly enough time. Like, let's say that the recession, the market crash really happens here in the first and second quarter of this year, then that gives them a whole 3.5 years for the economy to recover, right? Now, Donald Trump wants to kind of remake the economy. He wants there to be more manufacturing and things like that. That might be more difficult to pull off than we think, or than Donald Trump thinks. So the economy may not turn out the way that he wants, and we might still be hurting in various aspects, even though chances are that by the end of his term, the S&P 500 would be to new all-time highs. Also, it might not matter because, like, what if it really screws him over in the midterms? I don't know. Maybe that's probably a bad example, because for the midterms, right now, Republicans have a 3-vote majority in the House, and they basically have 3 seats up for grabs that were in areas that were won by Democrats, whereas Democrats have 13 seats that were won by Republicans last time around. Won by Donald Trump, that is, last time around. So, like, 13 vulnerable seats. So, even if the Democrats had, like, a full clean sweep, that would just be, like, Congress break even. But I do think that you have to be careful about, like, you have a recession and you let things get too bad. That could make people skittish and could prevent you from being able to implement the rest of your agenda, right? Man, this is coming back so hard, by the way. So I guess that's what I could say about the economy recovery. What's the end goal? Lower interest rates? What's the fastest? Well, I don't think that that's necessarily the end goal, AO. I think that the primary goals are to reduce government spending, get us in a better, but get us in a better fiscal situation is maybe a secondary objective. And that's where maybe interest rates would matter, right? But I think that his 2 primary goals are to reduce government spending and increase the manufacturing sector of the United States. I think those are his 2 main goals. When the U.S. is fully employed and the entire world cannot find enough technical workers for hands-on jobs, how is an expansion in the make industry possible? You know what? Here's the thing. I know nothing about the manufacturing industry. I know nothing about what it's like to be a steel worker or anything like that. It is kind of interesting that we're getting this AI thing and everybody thinks that the tech jobs are all going to go away. Because that's really been the primary driver of the United States economy for the last 20, 30 years. And if, you know, there really is not money to be made in being employed in the tech industry, that's going to absolutely decimate. But basically, then everybody would be poor. Everybody in the United States would be poor. So you'd have to replace it with something. And if you say that, well, you still need bodies to do steel and things like that, oh, okay, that's a different thing. But that stuff is probably all nonsense anyways. I don't think that there's going to be less tech workers in the future. I think that this is a situation where, first of all, the AI cannot completely replace the people, and that the AI will actually just increase the demand for developers in the long run. So, and it probably will happen in other industries as well, that like you will get robots that can do steel work, for instance, but it will just require even more supervision by humans. So, but I'm getting off track here. My point was, I don't know enough about that industry to really know or understand what's involved in trying to rebuild that industry in the United States. So all I can say is I hope it works out for them, right? Okay. But somebody asked another question. What's the biggest thing you learned from John Grady that you were using in your trading today? Oh, I don't know. I mean, I think that John Grady's course just does a really good job of explaining to you like what's actually going on and the sort of things that can be happening. I do believe that to some extent it is incomplete, because if you look at his setups, and you just take his setups, well, it doesn't work. I never had success with that, at least. There might be critical aspects of it that aren't working. I should try interviewing him and seeing if he'll show us his profits or not. But I didn't have success with it. And a large part of it is like context and things like that. And that's where I really feel that our empirically based approach and the information about markets that we have really kind of fills that out. That actually it's about the future orders, and here are the things that you can kind of see that might help you predict the future orders. And then you can come in and you since now that you have an expectation, you can see if the flows that you're getting are really in line with that, right? And yeah, you know, that's then where the discretion comes in. This situation, it was a counter flow, and I did not realize it until it was way too late. So I misread that badly. Anyways, so especially for like a course that's only like $70 or something like that, I think it's amazing. I think if you're gonna do order flow, I would absolutely buy his basic course. Trump's primary goal is to make Xian scalping great again. I'm telling you, Mr. President, just help me out a little bit. Next time, before you click send on that tweet, just go and to Seth's live stream, see if he's got a position on or something like that, you know. Maybe wait for me to get out of it, take profits on it. Or if it's a losing position and your tweet is going to help me, you know, then you can do it immediately. But if you could help me out there a little bit, I would appreciate it. Otherwise, you owe me 500 virtual dollars because it was a sim trade. Oh, let's see. Did I miss any other comments? It's time for us to get going. When the U.S. is fully employed and the entire world cannot find enough technical workers for hands-on jobs, how is an expansion in the make industry? Oh, yeah, I did answer that. I guess the other thing I was going to say is I don't really believe that the U.S. is fully employed. Like, I think that some of our understanding about the unemployment rate needs to be adjusted, because first of all, we've always had this idea that like there is a natural unemployment rate, that you have to have a certain amount of unemployment in order for the people to be able to cycle through the economy and things like that. And we've been below that for a long time. So either the unemployment rate needs to go up here, or we need to adjust our understanding of that. I don't know which side it is. Maybe the reason why the labor market is so tight and everything is because the unemployment rate is so low and nobody wants to leave their jobs. Ergo, for somebody that doesn't have a job, there's nowhere for you to be able to go. But then there's this other thing that's like, okay, the hiring rate, that's pretty bad. You can look at it in certain industries, and it's really bad in the tech industry. I think that it can only be bad for so long in the tech industry before that kind of starts to spread like a disease into other sectors, right? So I think that that full employment is not sophisticated enough, and I hope that there's more research in that direction in the future. A lot of the volatility is also due to market making pegged to U.S. equities at the moment. Yields have been in tandem very close to, yeah, it has been, Murat. I wouldn't say tick for tick, but the treasuries are reacting to the movement in the S&P 500 much more strongly than they normally do over the past week. The SPOOs are currently kind of like fighting to maybe bottom out. But the treasuries, on the other hand, are just all over the place. Like, we had a big head and shoulders that came all the way back. And now they're testing it again. So it's time for me to get going, guys. I will see you tomorrow. Hopefully we'll have some more fun then. In the meantime, stay excellent, team.